Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Rob Morris. Rob is the Global Head of Consultancy at Cirium Ascend. He's joining us for the purpose of our Aviation Leaders Report for 2025, and we're recording this in late November. Rob, thanks again for coming in for the chat. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about Cirium Ascend?
Yeah, thanks, Joe. Well, thank you very much for this opportunity. So Cirium Ascend is a global aviation analytics company providing data and analytics across the whole space, including aircraft schedules, airline schedules, aircraft tracking data, aircraft fleet data, and of course, from the Cirium Ascend consultancy perspective, values and lease rates. We've been an appraiser for many years, go back 50 years or more. We've been appraiser of the year a number of times.
Oh, very good. And long may that continue, Rob.
Thank you.
And maybe if we start on the demand side of the equation, Rob, can you talk to us about your assessment around the demand environment and how we've seen that vary geographically across 24?
Sure. So 2024 is the year that demand finally recovered and started to grow again, remembering the depths of COVID and all that. We need to stop talking about that because this year, demand globally is going to be growing about 12%. That's RPKs, I mean, year over year. Capacity growing a little bit less than that. We initially predicted it would grow a bit more than that. We had 14% traffic, 12% growth. That's equivalent to around 6% over 2019. So we're back to growth again. Of course, the growth varies by region, as you allude to in your question. Asia Pacific's been a bit slower to recover. China's had some very different dynamics, actually. The Chinese domestic market growing very strongly, more than 25% up over 2019. But the international market, more than 20% down still. Of course, domestic was much greater than international, so that means overall China has grown significantly. US actually seeing some slower growth dynamic this year. US effectively, airlines have realised that they've got a bit too much capacity in the system. Interesting, given we know we're short of aircraft. But what we're seeing is US airlines starting to file less and less capacity going forward than we saw. Europe growing pretty strongly, not really affected by the conflict in Ukraine. The rest of Asia Pacific impacted by China International to some extent, but also now back into growth.
And as we sit here in late 24, as you look into 25, expectations around how that growth will evolve?
So I think the schedule's a really interesting way of looking at that. So if I look at the schedule on a monthly basis and look at year over year growth, if I go to March next year, as is filed today, we're seeing 6 to 7% growth globally. So airlines expecting to see more growth. Now, as I've already alluded to, in the US, we're seeing the schedule being pulled back a little bit as we come nearer to it being flown. So we might see some softening of that. But next year, we're expecting to see 5 to 6% growth.
And if you consider that potential growth as you assess maybe geopolitical risk or macroeconomic risk, do you view those as kind of heightened levels? Or are we back to a state where we're a little bit business as usual?
No, I think that risk is kind of heightened because we've had conflicts. They haven't affected demand significantly. Neither the Middle Eastern conflict nor the Russia-Ukraine conflict. So for now, it seems like we've learned to live with those. I think there are more unknowns though. Following the US election, we're not sure yet what trade policy will be. We're not sure yet how that might impact on tourism or how it might impact on industry. So for now, I think there is a little bit of heightened uncertainty in that growth, but I think we're not too concerned. We're also some uncertainty on the inflation side because obviously inflation had started to drive ticket prices up. As ticket prices go up, that should dampen demand. We didn't see that dampening because we were still in the recovery from COVID when ticket prices went high. But I think now we're seeing people start to feel the true effects of inflation, and so we might see airlines seeing a bit of softening if they keep ticket prices high, albeit they've been coming down recently.
And then always, key driver or key challenge for the airlines to manage is around oil and fuel. Can you talk to us about how that evolved or how steady it was in 24 and just what's your outlook looking into next year?
Yeah, so it's been the one positive this year for airlines, I would argue, the benign fuel price environment. I mean, every other cost has gone up significantly. And if you look at airline earnings before tax in their most recent statements, they're all doing worse than last year because of higher costs. But the one cost that isn't higher is fuel. Fuel's about 14% or so down, I think it is, year on year. To date, that is. So looking at January to October this year compared to January to October last year. So for now, airlines have enjoyed a benign fuel price environment. There were some concerns when recently when the Middle Eastern conflict became a little bit more serious when Iran got involved for a short while. That spiked prices for a short time, but they came back down again. So hard to know. I mean, outlook, when I used to come to the conference in January each year, I listened to the oil price economists trying to explain their outlook for fuel. They get it wrong, but next year they explain why they got it wrong. It's a really hard thing to predict. So for now, airlines enjoying that benign fuel price, no idea really on the outlook.
So if you step back and you look maybe broadly at airline profitability, Rob, you're kind of saying, right, demand environment, pretty decent, fuel okay, operational costs is probably the key challenge in what you're highlighting there, and we've seen the challenges that have come from a pilot perspective. But your overall sense check in looking at the 25 on airline profitability, are we in any kind of yellow or red flags, or relatively optimistic around it?
I think relatively optimistic. So if I think about the IATA report their financial performance on an annual basis, their last projection in June was that this year, pretty much steady as she goes, very similar to last year. I think there's a bit of downside in that. So airlines will do globally a little bit worse this year than last year, but actually the numbers will still be very similar. This is net profit globally in aggregate terms compared to 2019, very similar to 2019. So now at the start of the cycle, getting what we had at the back end of the last cycle. I think 2025 might be pretty much similar, steady as she goes again. The cost outlook, I mean, pilots, significant cost increase this year, but those contracts are now signed effectively, so we're not going to see a significant labour increase next year. Inflation will drive maintenance costs up still. We need to talk about values and lease rates later because ownership costs are probably going to be stable now, I would argue. Fuel is what fuel will be. So for now, I think it's pretty much steady as she goes for next year in outlook terms. With, a bit of upside in Asia because Asia was still recovering this year. Yeah. So Asian airlines looking at better performance next year. And if you read all of the airline statements, most recent statements, quarterly statements, they pretty much say the booking outlook is positive for next year.
Which is all very positive. I think you look at 2019 results, when we were pre-COVID and looking at them, we would have been pretty happy with that from an airline performance perspective. So if we set that demand airline performance piece, broadly optimistic, pretty decent outlook. Key challenge across the sector is on the supply side. Can you talk to us about what impact you're seeing that have on the market?
Yeah, I think the supply side is what drove last year's yield environment, where airlines were able to charge significantly more than they had been previously because they didn't have enough aircraft. So we hear airlines tell us again and again, we don't have enough aircraft. I think that's a subtly different argument now, though. We don't have enough new aircraft. Thinking that through, we were expecting to see Airbus and Boeing delivering significantly more aircraft this year and next year than we expect they will now. That would bring us a fuel improvement, a 15% fuel burn improvement that gives airlines a cost benefit, so that efficiency benefit. They have enough aircraft, frankly. If I do the maths, and I did the maths empirically, let's look at what the fleet needs to be to service the growth we have today, work it all through, what's been delivered, what's been taken out of the fleet, etc. I think there may be a deficit on the single aisle side of maybe 400 aircraft. But remember, there are 600 GTF-powered A320s parked. So if those were in service, we'd have too many. Of course, we wouldn't, because we'd have taken some older aircraft out of service. But we've kept enough aircraft in service by keeping older aircraft in service for longer. Now, that's been positive for lessors because they've been able to charge higher rents for those aircraft than they could a year or two ago, maybe 2 years ago. They've been able to enforce significant extensions on those aircraft, maybe 5-year extensions where they wouldn't have expected those. And we're seeing economic life increasing a little bit. But at some point in the next 2 or 3 years, that equilibrium will flip again, and we might have ourselves too many aircraft, and then those older aircraft will exit. So for now, I think Airbus and Boeing not delivering enough aircraft means not enough new aircraft. We've corrected that by keeping older aircraft in service for longer. But as Airbus and Boeing finally are able to recover their productions, who knows when that might be, we'll talk about that perhaps a little bit in a short while, we will see a change, I think.
Maybe, yeah, I'll come to that in 1 second, but to probe on that production rate piece, like we're not even back to 2018 levels. Like what kind of level are we compared to historical norms around what? Let's keep it on the narrow body side to begin with, right? The narrow body side on Airbus and Boeing, historically, how are we sitting?
Yeah, so in 2018 or 2019, Airbus had got to just about got to 63 on the A320 line. A220 was a bit about probably 6 or 8, I don't know the number, but 63 on the A320 line, and Boeing were above 50, 52 on the 737 line. Well, today, And we use first flight data to track production effectively. And for the last 18 months or so, Airbus have been stable at around 50. So they're building 13 aircraft fewer per month, and their target was to be at 65. So they're building 15 fewer than they targeted to be at the end of this year. They're starting to pick up, but slowly. Boeing is just all over the place because of the MAX issues, because of the strike. I mean, Boeing claimed they were at 25 in the summer. The data didn't justify that, so they were either building blanks, just putting blanks down the line, or there was something wrong with their data. But Boeing are way below that now, and they're going to have to recover from the strike. So,
and is it too early to tell the strike impact and what that has done?
Well, Boeing is still capped, obviously, at 38 by the FAA, and who knows when the FAA will remove that cap. But I suspect that it's going to take at least to the middle of next year for Boeing even to get to 38. Meanwhile, Airbus will start to hopefully increase next year. But remember, coming out of COVID, Airbus were targeting 75 in 25. Now they're talking about 75 in 27, and many think it may be 28 or beyond. So it's going to take a long while yet for the new production to improve to the levels that were being hypothesized.
And maybe taking that medium-term lens on it, you mentioned maybe a 2 or 3 year timeline horizon. When we're having these conversations, some people are saying, well, it's end of decade, it's 5 years before we're at a normalised supply piece. Your thoughts on medium-term, how it plays out?
Yeah, I think that's a risk, because if it is 5 years before supply normalises with demand, then of course there are two sides of this equation. There's demand as well. So is there a risk that demand gets dampened because we don't have enough supply? Because the older aircraft that are remaining in service right now to service the demand we have are finite assets. They have economic lives that are, well, for an Airbus, typically we'd have either seen it retired at 18 years, its third C check, or 24 years, its fourth C check. But I'm hearing that aircraft might go to 30, but they can't go beyond 30. So at some point, we might see, if the OEMs don't increase production sufficiently, demand cannot grow in line with the natural demand. It's effectively frustrated.
Yeah, and to bring it back, maybe the airline piece is curious for a minute. That supply constraint, how much discipline do you feel that's driving on the airline side? I always when we were having this conversation in not a supply constrained environment, we'd be worried about oversupply, airlines flooding the market. Talked about RPKs versus ASKs. Your piece around the discipline that's driving and how important that's been.
Well, it's interesting to look at the US market to see how that changed, because if you think about last year, the story was about not enough capacity, therefore we could charge more, and people were all complaining about high ticket prices. But coming to this year, and suddenly the US airlines who were looking to grow at 6-7% per annum, including the majors, said in the summer, well, we've got too much capacity. They pulled back. They're growing at 3%, or in Southwest case, potentially saying we won't grow at all next year. Spirit, meanwhile, found themselves in a position where they were just trying to push too much capacity into the market that wouldn't bear even the cost they were trying to charge. So we are seeing some correction there, and I think airlines learnt discipline last year. They then forgot it through the winter and into the early part of this summer, and they're going to relearn it again. So it might be a bit cyclical, and it's to my point that I think the supply-demand dynamic might be a bit finer than we think. When people talk about the end of the decade, I'm worried that it might be a bit earlier than that, because my point, the math suggests we've only got 400 too many aircraft globally, but 600 new aircraft are parked. So it wouldn't take much to correct that.
Yeah, which is interesting, because some of these conversations, we didn't build 2,000 aircraft, we didn't build all these pieces around COVID. So kind of an interesting counterpoint to that piece. And this might be too early to tell, Rob, but your thoughts around, we mentioned the US election, what Trump might do in the context of tariffs. How do you think that might impact or disrupt what is already a pretty volatile environment?
Yeah, it's an unknown, isn't it? I mean, he will talk about doing certain things. Whether he does them is another thing. It's their impact on the economies and how the economies grow. And it's interesting, I read a piece this morning where China was starting to talk about the increasing importance of globalization. Wow, they've been internalizing their economy for the last 18 months or so, and then they start talking about globalization and how important it is, almost a counterpoint to Trump tariffs. But I think tariffs are a risk. I mean, especially tariffs, in the US, if he starts charging tariffs on aircraft imported from Europe, because the US deficit with the EU is quite large, so he tax that, then US airlines can't get enough aircraft. Likewise, Boeing could be damaged by counter tariffs, if you like, back on the US into markets like China. So it's a worry, it's a risk, it's something to watch for. Hard to tell, because it's a binary decision from a interesting and volatile character.
Maybe shifting gears, Rob, when we look at the valuation market. And maybe if we break this down into different segments, so if we can start on the narrow body side and breaking that out between new tech and current tech, what have you seen over the last 12 months from a valuation perspective?
So over the last 12 months, we've seen the continued positive pressures. Again, it's about supply and demand. So with not enough supply in the market's perception and strong demand, this is for aircraft now, and for new, it's for replacement as well as growth. We're still seeing positive pressure. So values are still going up, but they're not going up as quickly as they were in 2023 and 2022. And it feels like we're possibly coming towards the top. That applies to lease rates as well. If I move to used aircraft, same thing. And used aircraft was a bit of an inversion of the value curve. We were seeing aircraft at the very back end of their life cycles, seeing some really positive, very large increases in values. The values were lower, of course, but large percentage increases, both because the market was in demand there for part out. We didn't want to part aircraft out, but where we did, we charged a lot for those aircraft. For engines, we want to buy the aircraft to take the engines off and lease them for green time, because the engine leasing market is very hot right now. Or for flyers, airlines buying aircraft from leasing companies out of leases, where of course the deal has to deal with the fact that we are also paying out the rent early. So positive value pressure in the narrow body side, both on new and used.
And how does that compare when you go to the wide body side of the house?
The same, in fact, more positive pressure. So wide bodies were slower to recover because international traffic hadn't recovered so quickly. So this year we've seen percentage-wise greater increases. We're also seeing, of course, the delay of the 777-9. Who knows when the 777-9 will be certificated and delivered. That's given the 777-300ER a very positive value boost. It's an interesting contradictory dynamic where we saw a lot of 300ERs potentially committed to freight conversion because the feedstock price was low. There was no other opportunity for the aircraft. Now we're seeing those aircraft in leases or airlines buying them out of leases with increasingly higher values. So positive pressure there. In that wide body market, not every type has yet got back to the values they were at in 2019 on a fleet weighted constant age basis. So there's a bit more recovery in the wide body market still to come, I think.
Yeah, and maybe talk to us then about the trading environment. And maybe it's, I think if we chatted about this a year ago, we said trading definitely slower uptick. Can you talk to us what we've seen trading 24 versus 23, but also trading 24 versus maybe 19 in the pre-COVID time?
Yeah, so trading is up over 23. I mean, I took a look at some numbers yesterday into the end of October. We've recorded about 400 single-aisle aircraft trades between lessors with leases attached. That was a much lower number last year. It's still lower than it were in 2019, though. And again, remember, 400 aircraft is probably, in broad terms, it's around 10,000 or so single-aisle aircraft in operating, leasing, management, or ownership. So, about 4% of the fleet is trading. That would have been a much higher number pre-COVID, sort of getting on to 10%.
Yeah, so it's still a big gap in that trading environment piece. And maybe looking at the leasing macro, Rob, if we go back to coming out of COVID, you had cash-constrained airlines that relied even more on lessors. And I know I've often looked at your long-term charts where we go from maybe 20, 25% during the decade to really getting up to that 50, 55% at the height of COVID. How's that evolving, that kind of least percentage piece? So
first of all, to be clear, the numbers I talk about are the percentage of aircraft managed by lessors, passenger, narrow body and wide body, single aisle, twin aisle. So that's, and it's units, I measure it in units. So that smashed through 50% during COVID because of all of the sale leaseback activity and the efficient capital that the lessors had compared to the airlines. But that slowed a bit. It peaked at around 52 point something, 52.3 or 4. It's down to 51.5 now. So it's gone down a bit over the last couple of years. It peaked in kind of mid 2022. And I think there's some good logics for that. If you think about we talked about trading, but you don't just trade aircraft, you also part aircraft out, or you trade aircraft to lessors who will part aircraft out. So we're trying to maintain the portfolio age at a relatively young age. And we've kept on trading some aircraft out for part out. We've kept on converting some aircraft to freighters. We've got the exit at the end. It's not as much as it was, but it's some. We're still buying new aircraft, delivery from our order book or sale and leasebacks, but not as many as we were because there are not as many being delivered. So we're still maintaining 20% market share of new deliveries, but there are fewer aircraft being delivered. So we're not feeding enough aircraft in the front end. That's why I think the share is going down. To be clear, the portfolio has grown a bit. It's grown by a net 400 aircraft in the last 2 years or so. So it's about 12,400 narrow body and wide body compared to 12,000.
That's interesting. That's probably the first. Is that the first regression we've seen in a probably significant period of time?
It is the first regression really ever. I mean, it's stabilised and it's kind of bumbled about a bit, but it's the first regression ever. Again, I should make the point, in value terms, the share is higher because lessors are typically managing the younger aircraft, so higher value aircraft. So in value terms, it's 56% or something like that. But it is the first time it's gone down.
And maybe then keeping with the leasing market around lease rates, Rob, what are we seeing there? And maybe again, parceling it out into, if we take the shiny metal they're taken off the production line eventually versus what we're seeing in the secondary market. How are those lease rates evolving?
So most of the lease rates are broadly stable today. They grew in the early part of this year. But we have our values review boards meets every 2 weeks to consider every type. We consider the commodity types, the A320, the 737, 3 or 4 times a year. And in our most recent VRBs, we've seen stability. So if it's a new aircraft, new A320, our opinion's around $400,000 a month, about the same for a 737 MAX 8. I think there's almost like a psychological barrier there where I say, I don't want to pay more than 400K for an aircraft of that size, or I'll pay 450 for an A321 perhaps. Now that's where the rents were when we opened the market. When we opened the market for the MAX 8 and the 737 and the A320, back in 2012, 2013, when they were first being delivered, or 2014, when they were first being leased, for delivery in 2015, 16, we were seeing 400, 410, 420. So we're back to where we were. In the midlife space, it's a bit different.
Sorry, just to say, we're back to where we were with a bunch of inflation in between.
Yeah, a bunch of inflation, right? Of course. So in real terms, not back to where we were. In nominal terms, back to where we were, but not in real terms. But there seems to be, and what we're seeing is a stability. So we talk about an inflection point, and George Dimitrov, our head of valuations, and we talk about this a lot. And it feels like the trajectory, which was upwards, has inflected, but inflected to stability. Now, we've said, or we're going to say, I think when we publish our latest changes, we've got these types now on watch. We're just wondering about the supply and demand dynamic, the ability of airlines to pay more, and whether we might see an inflection down. We don't think we will, but we're watching for it. When we come to the used market, a bit different. Again, if I go back to where we were in 2013, 14, we've exceeded that now. So a midlife A320ceo or a midlife 737-800 in the sort of mid 200s range now. It was about that or a bit below in 2013, 14. And we've seen asks for higher. We've seen asks at 250, 260. But actually, what we're hearing is airlines are starting to wonder whether that's an aircraft that is worthwhile signing up for a 5-year or more term being asked for today, because that aircraft then becomes an older aircraft. And do they need that capacity? That's my point about where we dampen capacity, because we're not putting enough new aircraft in.
Yeah, and maybe looking at 2 kind of more niche segments of the market around regional and freighter, maybe starting on regional side. Can I get your perspectives on how that market's operating, and that is around kind of lease rates and values and general activity?
So the regional market was the first to recover in the context of capacity, because the domestic markets were first. So you had turboprop and regional jet tracking numbers were up above a single aisle or twin aisle. But the market's kind of slowed down a bit. So, because you've got a different OEM dynamic in each of the turboprop or regional jet space, you have effectively a monopoly. And the markets don't really like monopolies because they want to be competing types. So what we're seeing is, on the regional jet space, the E2 competing with the E1 used aircraft, or on the ATR space, ATR competing with used Dash 8s. We've seen some recovery. That market was a little bit frothy before the pandemic, the ATR market particularly. We're almost back, but not quite. So the regional jet market, turboprop market, values and lease rates, not quite back to where they were before the pandemic.
And maybe if we look at freighter, then I think, if we were having this conversation 3 or 4 years ago, very boomy, right? We had the post-COVID e-commerce explosion, then slight regression, world trade concerns, belly capacity coming back. Your assessment on what kind of year freighter is having and where you think that'll go next year?
So that's been volatile. Values to some extent in that market driven by 2 things. They are driven, or our opinion is often driven by the value of the feedstock plus the conversion cost plus the utility value. And we're seeing the value of the feedstock increasing significantly. So you would argue that actually value should be going up because the feedstock's gone up. But at the same time, we've seen a supply and demand dynamic. Again, it's supply and demand, where we've seen perhaps too many aircraft converted too quickly, particularly in the narrow body space where we've seen 737-800s that were committed to conversion were converted. And there are numbers of aircraft now that have not found a new lease. And in some cases, actually, engines have gone out on lease and the freighter is sitting waiting for the market to recover, become less volatile, whatever it is. On the wide body space, the same thing pretty much. I mean, A330s were flooding into that market effectively. If there's a positive for A330 owners who haven't yet converted but have thought about committing, the same supply chain challenges that affect the OEM production on the passenger side affect the P2F conversion market as well. So there have been delays in conversions, and therefore aircraft that potentially were going to be inducted may now not be inducted and may find a lease as a passenger aircraft. So some of the supply that we saw perhaps going in that might have created that oversupply may come out and end up in the passenger market.
Yeah, no, I think it'd be interesting one, as you say, always been spiky, and the thinking 2 or 3 years ago that maybe we reached a steadiness doesn't seem to have followed through.
There's a positive. The positive is that the yields in the cargo market are structurally higher than they were, this is in nominal terms, pre-pandemic. So we have got a real terms increase in yields there. We have had a delay in return to all long-haul markets, so there's still some need for wide-body main deck cargo. The one perhaps positive outlook point is that the passenger wide-body market moving forward is going to be a different shape. Before the pandemic, we had a lot of 747 still in that market. We still had some 380s. We had some 777-300ERs, lots of 777-300ERs. Now we've got more A350. We've got more 787. They're smaller aircraft with potentially, therefore, smaller cargo capacity. Yeah. So we might see less belly hold capacity in absolute terms, and that might be a positive for the main deck cargo market.
No, that's interesting to see how that evolves. And maybe in closing, Rob, and excellent insights as always. Your takeaways when you look at your outlook for 25, what are the key messages?
I think there's a few things to think about. There is that OEM recovery, and whether that OEM recovery can be quick. I don't think it will be. So I think we'll still be short of new aircraft for a while. I want to watch the GTF situation. We didn't talk about numbers there, but there are 600 aircraft still parked today. About 520 of those are managed by lessors. Now, of course, they're on lease with airlines, but airlines aren't earning revenue with them. So we've got to think about that and how that all plays out. The peak is pretty much now rather than first half, as RTX said. I think I'll still be thinking about sustainability. We haven't talked about sustainability at all, but that is still a big issue because as the fleet continues to age because we're retaining older aircraft, we're not seeing the efficiency we should be getting. So our progress towards net zero, which is already challenging, is going to be slower. And people are going to start to question our progress. 2050 is fixed. We're another year towards it. So I think we'll be thinking a bit about that as well. And of course, the volatility of geopolitics, things we can't actually measure. But my positive takeaway on that is we've had volatility for several years, and the industry's ridden through that volatility and done very well through it. So hopefully it won't be any big shocks there.
And if I was to pin you then, are you net positive, net negative, net neutral on your outlook?
I'm always net positive, but on the value terms I mentioned, we're kind of on watch. I think we may be at the top. And I think whilst we're going to have a growth cycle, this growth cycle feels like it may be slower than the previous growth cycle. Remember, the previous growth cycle was close to 7% compound annual growth for nearly 10 years globally. This time round, who knows where the end of the cycle is and who knows what causes it to slow, but it feels like a 4 to 5% cycle this time round.
Well, Rob, thanks as always for your time and insights. And on behalf of KPMG and Airline Economics, I'd like to wish you and Cirium Ascend a very successful 2025.
Thanks very much, John. The same to you. Thank you.